Hello friends, welcome back for Bitcoin Technical Analysis with me, your pal, Rocky Outcrop. And in these videos, by the way, what we do is videos for actual traders, for people who are actually trying to do this every day to make money, as opposed to videos for people who are just like looking for clickbait, or for just that their main priority when they're making a video is how many views the video will get. So they choose a clickbaity title and a clickbait thumbnail and everything else, and talk about stuff that really won't actually change or influence your trading at all. Or if it does influence your trading, it would influence it in a negative way, because they talk about stuff which is like so far past the range of where you'd be talking about. You talk about lots of videos out there like to talk about how the price is going up to there, or the price is going down to there, and stuff like that, rather than looking at the realistic ranges where you'd be trading at and taking profit at way beyond either of those places, or stopping out way beyond either of those places. And it doesn't actually help in terms of the daily technical analysis. So today's video, I'm going to just keep things a little bit shorter, and just talk about a couple of things that and point out the fact that you can watch yesterday's video. Things haven't changed actually since yesterday, and it's quite detailed, and there's a lot of good stuff in there. For instance, when I'm talking about the 50 moving simple moving average, for example, and stuff like that, and when I'm talking about crosses and whatever else. And there's a few things that I just like to point out to people who are traders, who want to know about these things, so that's the benefit. You guys, girls out there who are actually proactively trading, just what kind of things would you like to look at? Just would you like to know about in the meantime, just for now? And there's a couple of little things. So on the CME chart, you might be interested to see, back then there wasn't a golden cross in the 10th of March area. It got quite close, but it didn't actually cross, and really we've been living under death cross conditions since back here in December 2019. So all of the rise up that we saw in this, up until Valentine's Day and all that on the Chicago Mercantile Exchange charts, didn't actually transpire in golden crosses. And just to draw the comparison over here, how we did see the prices cross on the spot prices. Now, if you've been trading this for quite a while, you'll probably be aware that that you can look towards the Chicago Mercantile Exchange charts for additional supplemental information which might help you make your trades and everything else. And really overall what I want to see happen is for there to be a golden cross over here on the Chicago Mercantile Exchange charts at some point in the future. That's what I would like to see, for me to be able to get quite for as one of the bullish aspects on this in terms of identifying the trend. And it's just to be aware that hasn't happened. It didn't happen back then, and we're quite close. So we could see the moving averages get fairly close again and not cross, and we need to kind of bear that in mind, just to draw a distinction. Now, why am I pointing that out? Experienced traders, of course, know this already. It's not news to them. But if you're aspire to be a trader and to do this sort of every day to make a living, then this is just one of the small things that you might want to be aware of. And you might question, like, well, why is it so that they wouldn't have crossed over here on Chicago Mercantile Exchange when it did on the spot prices? Well, it's because these are traded Monday to Friday, and the spots are traded over 24/7, and as a result of that, a 200 period moving average, for instance, on the CME charts is 200 working days. It doesn't include weekends. 50 simple, likewise 200 is 50 working days, so 10 working weeks. Whereas on the spot prices, a 50 simple moving average isn't 10 working weeks at all. It's 50 days. It's different. So try not to confuse these things. And of course, when you're looking at these moving averages, and if you're looking at guides, or people are talking about stocks and shares, like, oh, Apple's had this cross, or Google's doing this, or Facebook, or US Steel, or any sort of normal investment trading thing that you might be looking at on YouTube or whatever, and they talk about things like golden crosses and stuff like that. Now, it's a different concept. It's a different concept when you're looking at a 24/7 market compared to this, and the CME chart is handy for that. So that's one thing that I just thought I'd like to point out. Another thing that I'd like to point out, as I spoke about in yesterday's episode, is that on the CME charts, we really need to see the prices go above 9,200 in order for us to get kind of a bit more bullish on this. in the shorter term. So that's not happened yet, you know, and we could see the prices over here the other day on the 29th of April actually came up as high as 9,615 and sank back down again. Current price on CMEs is around about 9,000 flat. So, you know, we need to see the prices open and close, decent time frames a day, up there. For us to be a bit more bullish on this particular thing, just as a sort of comparison point, you know, for how we're thinking about things. And the other thing that people like to know about is that there's gaps on these charts, and that they do tend to get filled, and that the sort of closest gap to us to really be aware of right now, which is of sort of note, is this one here at 7,500. You could look back to the gap up here that we see on the chart. I believe it's right here at 11,000 or so as being the, you know, the next two to look to, and this one's more significant because that's a 24-hour chart gap right there, and this one here is only a 4-hour gap. And there's differences between them. But I invite you to go and look at information about gaps and how they work, and all that sort of stuff. And if you ever see anybody talking on Twitter where they say, because I saw this the other day, and they were looking at the Coinbase charts. This Coinbase doesn't even matter. It's not that Bitstamp, but it doesn't matter. They were looking at it and they had it on the weekly. And they said, oh, there's gaps here, here, and they had all these gaps, these like lines saying, oh, look, there's all these gaps here on the weekly chart. And people are coming along saying, oh, this is brilliant information, you should pay for this, and saying, and the paid group and all that sort of stuff. No, there aren't gaps on them, because, you know, it's very difficult for gaps to emerge. And when gaps do emerge on a 24-hour a day, 7-day a week trading asset like Bitcoin, then you're looking towards the small time frames really for those gaps to actually appear, you know, rather than you know, if somebody says there's gaps on the weekly time frame, then they're talking rubbish, unless they explain it to you and they're talking about something else, and they actually are talking about a candle which doesn't leave a gap on the chart, but they're talking about liquidity stuff. Anyway, the final thing that I would point out to people as well is that we've not got any bearish divergence on this RSI and the stochastics. There is a touch of bearish divergence possibly down here coming in on the MACD. Of course, that's not set in yet, and you'd only be able to say that after there was a local low, you know, to be able to make a comparison between. And we're still in the process essentially of making this high as we consolidate. And I appreciate you can't actually see the price action in there as I'm talking about this, but you know, again, this doesn't matter. You don't need to see the tiny little minutia of the price action, even on this 24-hour time frame. As I'm talking about this simple concept, we're consolidating in this area where the crosshair is flinging around at the minute. And previous to that, you know, as on up to the high that we just had, it wasn't divergent across the stochastics or the RSI. But what are we looking at then in terms of things like this? You know, there's a couple of things. If the prices were to turn around from here and go down the way, just let me get rid of a couple of things here. If the prices were to turn around from the prices where we're at the minute, and go down the way, then, you know, this is the previous high over here up at the 13th of February, and this is where as high as the RSI was, and you can see the RSI has come up there as high as that was right where the prices are right now, yet the price action is lower. Okay, so it's the same height on the price action, and this is overall is actually a downward trend if you look at it, you know, highs, lows, and highs and lows and all that sort of stuff. So looking down towards the lower side of this and looking back here between this point here and these points for the lows and this downward trend, it's not actually bullishly divergent. It's not. And if you look to here and you see that the RSI actually came back up as high as it was previously, and likewise with the stochastics and stuff, but the price action didn't, that would be hidden bearish divergence, you know. So that's something to be aware of, like in terms of the sort of the momentum in the market, something to be aware of. Okay. And of course, as we spoke about, look at yesterday's video if you want to find out why I think this 9,200 area is crucial. But of course, it's this 10,500 sort of area speaks volumes for itself. Anyway, about the price, and we'd need to see the price action actually go up higher than over here. It would need to be, the price action would need to be higher than here, so that and at the same time the oscillators would need to go higher than this to avoid having that divergence on the go. you know, with the price, sorry, we've already got the oscillators coming up high enough, so the price action needs to go up to here in order to avoid that being hidden bearish divergence, you know. And the final thing that I would talk about on this chart, and of course this applies across the board, really, is that the stochastics up here, the 96%, I was talking about breaking bad, and the final 3% being the hardest on the rest of it. If we just zoom out a bit and put a lot more price action on the charts here, looking to the left, and I take, say, take a horizontal line here and stick it on at where the price is. Like, this is the previous high on the stochastics here, just so you know. That's the previous high on the stochastics there that we just had. So for us to avoid, so in part of this trend here, part of this trend here, the upward trend, for us to keep going up, having higher highs and all the rest of it without getting divergence, for instance, on this chart, on this one here, we'd need to see the stochastics go up higher than it previously was, okay, as we're making highs there, as the highs are matching up with the highs in the stochastics. Putting this horizontal line back on the charts, pardon me, and looking there and looking to the left and just asking the question, let's actually just make it full screen. Look at full screen and go all the way over to the left and say, like, how often does it really even do that? Like, how difficult it'll be for the stochastics to go up into that 98, 99 area? And how often has it ever done it? And if you look to the left there, you can see it's extremely rare. It's quite rare for it to go much higher. Now it could go up one more time, I imagine. As you see here, as you look to the left, and you see there's these wee little peaks up above that previous high. So a few times in the past, we've had it go up. And I'm looking back over the course of years here. This is now that's over 2013. So, with fundamentals and everything in the market very different back then, and the liquidity and everything very different back then, and stuff like that. So sort of erroneous stuff or standard deviation type stuff can happen, obviously, whenever there's less history, less liquidity and everything else in the market. So coming up, as it evolves and matures, like a fine wine or a bit of cheese, you're going to see that less and less. Last time then over there, sort of in 2017, coming up to the 20k highs in this area here in December, it was above it. Then so that was the last time it was above the line. You could maybe debate the point and say it was there in February the 18, which was also a local high of, and afterwards the price dropped significantly. Looking over to where we are, it's not been up there since, apart from for a split second there towards Valentine's Day. Right, so we need to be aware of that, and if you're looking at and that's why these videos are for actual real traders, as opposed to hodlers or investors who want to watch videos about the price of Bitcoin on YouTube so that they can just sort of kind of feel, in the industry. And I've got no problem with people that are doing that at all. I actually think that's really great. It's all part of the whole schema of how this has to work. There has to be a massive chunk of people out there that that don't actually have any real proactive desire to trade, or if they do have a proactive desire to trade, all they're really looking for is to feel like they're kind of partly in the mix, but they're not really doing the sort of they're not really looking at things themselves. They just want to see a big pattern that goes across 2 months or whatever, and think to themselves, well, I'll not use a stop loss because I know that overall there's a trend and I'll just get in somewhere around here, and because that person says it could go up past it, then I'll just wait and I'll get out at some, like with the risk reward being that I'll take a potential risk. You've seen these risk reward graphs in the past, like where people draw them on and they've got two boxes. One's red, this would be red or whatever, if it was a short, and this would be green, right? So you were shorting it, and you've seen them. I could just draw it on myself there, but I really can't be bothered because, like I say, this is for traders. You know what I'm talking about already. Of course you do. It's actually I've got that the wrong way around though. Essentially, so they'd be saying, I've got this trade idea. And what you're supposed to do is have a big thing up there saying, this is where my profit is, and this is what I'm risking. So this is your risk down here or whatever. And I can tolerate it down here, but if it goes beyond it, I'll be stopping out. And this is my reward up here. And all of this is like great profit. That's what you're supposed to be thinking like. But in reality, we know that it operates the other way around, and that what people are actually doing is they're thinking along these lines here, where they have a little bit of reward at the top for their trading, a huge amount of risk for what they're going to do, because they're just going to wait until they get liquidated, And then there's the I forgot to take profit. you know, moon hopium, where like they go to bed and the price is 9,000, they wake up and the price is 11,000, they think, oh great, you know, we've made it there, and they didn't actually trade the way up. That's the reality of things, you know. That's what, at least that's not necessarily the reality of things. Sorry, that's just my opinion about what a lot of people think in the market, you know. And I just wanted to kind of discuss that today and talk about things like that's why we make the videos the way that we do on the channel here, and that's why we have FOMO free, greed free, and why we talk about things realistically. Let's just have a quick look then at the prices where we are right now. We have this white line. Somebody asked me yesterday if I use log or linear as well, by the way, and I just thought I'd point out the fact that, you know, you can use either. It's fine. You can do pretty much everything that you can do on one, you can do on the other. It's fine. It's kind of when you flip between them that you kind of get problems, you know, or confusion or whatever, and that's fine as well. I'd like to use log most of the time because I'm more interested, like I say, as a trader, really in the delta, you know, the percentage difference change. You know, I don't actually care if it's $100 or $1,000 or whatever, you know, because when the prices were at $5,000 and it was to drop down to I went up to 5,500, for instance. That's a 10% rise. So you know, you're looking for if you want to see the same sort of profit and loss on your trade, and the price is at 9,000, and you want it to go up to 9,900. You're not thinking about it going up to 9,500 for the same dollar value increase. You're looking for the percentage difference. But I also look at linear quite a lot as well, and it really depends, you know, on just, well, actually, most primarily, I suppose it depends on my mood, if I'm perfectly honest with you. What's going on here is we're consolidating in this little area. Just we don't need the oscillators up on the screen anymore. Sorry. Yeah, so we're consolidating in this area, consolidating in here, and that's cool, that's fine. Let's just think of this as being sort of 50-50. You could go either way, and we know that there's potential measured moves out of this area that will take us up past the 786 retracement area and that 9,200 area. Of course there are, and then down the way there's sort of back into what could be potentially considered to be a rising wedge. You know, I've got it on log there, put it on linear. It doesn't make a, like I'm saying, like I said before, it doesn't make a huge difference. And we've discussed this a lot of times about how these things are subjective and whatever else. You could have a channel here, you could have whatever. It doesn't really matter. The fact is that this bottom line here is not really of the massive, you know, importance until such times as you're actually looking at whether or not you'd cross past something like that. If you're just coming into this general area, whether you're coming back into a wedge or a channel or whatever else, it's like, you know, that's kind of a moot point really, as you know, as a trader yourself, no doubt. And instead you're looking towards other things really. In the meantime, the obvious aspect of this is that if the prices drop down to where they had a measured move down the way, then they'd be coming down to this 236 Fibonacci retracement. And of course, you don't need to put all your stock and faith in Fibonacci retracements at all as a way of trading. You don't need to. I think everybody recognizes that there is obviously a lot of truth, or at least coincidence, in the way that these things operate, and that it can help, you know, you sort of manage your expectations or your risk or whatever. You know, I think a lot of people appreciate that, and you know, 8,000, the low 8,000s areas where you would see that. And of course, just looking in terms of percentage change, if we take it from the top there and go down to that area, you're looking at a 13% drop down in the prices. Of course you are. And go on down, then if you go down to the 382, for instance, you're looking at a 20% drop. And just to sort of reiterate again, you know, it doesn't actually make a difference. Now, you might have seen people on YouTube talking about how you can't use Fibonacci stuff on you know, if you draw it on linear, then it doesn't fit on log. But as you can see quite clearly there, all the levels are exactly the same when I flick between log and linear. Anyway, so there you go. So that's kind of what we'd be looking for really overall. What we've got in terms of just little things happening for us in the meantime is we have the 21 EMA crossing over everything, and you know, generally speaking, in terms of bullishness, you want to see all of the EMAs fanned out in a sort of, and the whatever moving averages, whether they're simple or exponential or anything, you want to see them fanned out towards the tops, toward, you know, in a procession that makes it so that they have so that they're in order essentially, and then you can feel more sort of bullish about things or whatever. So we want to see the 21 going up, and obviously want to see the 55 crossing over the 144 and the 233 and all the rest of it. It's all part of that sort of thing, but they're quite a ways away from doing that. And the 21 comes in down here at the low 8,000s as well. And just as a general sort of, just again a sort of general rule of thumb for traders, I mean, we know that during trends, regardless of whether it's an upwards or a downwards trend, you've got consolidation in here where the 21's running right through the middle of the price. Sure you do, but then you've got, comes back to touch it here, comes back here, crosses underneath it, comes back here, here we've got touches, here's like pretty much close enough, it's close enough, and all that sort of stuff. So is it feasible to have all that sort of stuff happen to us? Well, it is, and I don't think anybody out there who trades on a daily basis is really particularly interested in having trades, that of keeping profit on, without of going day after day not taking profit on 10% moves when really, you can make your living just essentially off the back of those 5% moves, even just smaller percentage moves than that. It's just that we get greedy in the world of crypto. So yeah, that's what we're looking at. Got this horizontal line up the top here, which is sort of the 8,900 area, 9,000 really, but 8,975 area, which we haven't actually managed to make it above and sustain above. Anybody saying stuff about like, oh wow, great breakout or whatever else, it's just FOMO. It's just FOMO. All it is, FOMO, greed, fear. It's all it is. It's not real trading. It's not a real trader. It's somebody who makes their money elsewhere and invests some of it into Bitcoin and gambles with it and likes to think of themselves as a trader. They're not a real person doing it for an actual living. So ignore that. We've got this downward sloping line here. It's a white line, and that's kind of looking at it from a monthly perspective. And if I just zoom back in here, or zoom back in, I haven't gone to the monthly, so you can see, we can quite clearly see that there's this that we've got a trend line towards the downside, and until we go above this horizontal line and all the rest of it, then we're not getting. This is May here, by the way. This candle that we're looking at is the May candle. It's not like tomorrow there's going to be a new one here, and we can just suddenly just take advantage of the fact that time has gone past and that we're suddenly beyond the prices. No, we're not. This is like we want to see this break. I do think that I do actually feel that after the fundamental change and all the rest of it, that we will see a bull market come in, and just like we have done over the last 3 Bitcoin 4-year cycles or whatever, we've seen that happen a lot. So I think we could see that again, sure do. But in terms of like this month, the prices would need to go above that line, where that horizontal line is at 9,000, call it, just to round it up. Next month you'll be looking at 8,800 or whatever to be getting above that area, and like the month after that you're talking about the mid 8,000s, and then the month after that low 8,000, blah blah blah. But for this month it's 9,000 essentially. You need to see the prices go up, actually up and above, and then next month open and close above that area with finding support if needs be at 8,800. But of course we'd rather be talking about the price action way up in these areas or whatever if we're being bullish, and if we're being bearish, then I suppose we'd rather be talking about the price action way down in these areas, which is what those other videos on YouTube are talking about. But you need to look at where the reality is on the ground. Anyway, that's going to actually do it for today. I know that I'm being a bit more somber today. I'm deliberately doing that. Actually, I am a really upbeat, happy guy, and I do like making jokes and all the rest of it. But it takes effort to do that every day, to project that happiness and enthusiasm out into the market. And this is just, I'm just sort of just being real here with you for today, and I hope that you found something useful out here, at least got a little bit of inspiration to take things a little bit more seriously, and if the fact that we're only getting 50 views per video or whatever tops on this channel doesn't really make much of a difference to me. Obviously I want to see it growing and appreciated by people and everything else, but if you would rather watch whoever else out there talk about things in a sort of crazy way, then I invite you to go ahead and do that. It's totally fine, or to watch them as well as these videos and whatever else. It's totally fine. I'm not a YouTube monogamist, and you'll notice that I very rarely look down to the low time frames. Very, very, very rarely. Very rarely. And if I was to do some scalping or whatever and all the rest of it, and that myself, which I do all the time, every day, I do a scalp trade, just for fun, just to sort of to keep my to stay limber, you could say. every day. I never talk about them on the channel because what value really is that to you? 12 hours after I posted the video, if you come along and watch it, it's zero value. And in terms of actual, in terms of technical analysis and making money and doing it for a living, what value is it for you? Either looking at the 50-minute chart, it's none. There's none. Consolidating in this area, we will get a breakout at some point soon from it, or a fake out. And if we get a fake out from it, then from this sort of so-called consolidation, then all it really needs to do is just go up. All it really needs to do is go up above 9,300 or whatever, and we can just look towards it being higher lows and higher highs in a sort of consolidation phase in the meantime. Whatever else, and like if it goes down below 8,500 here, looking at the 1 hour time frame, looking at the just in terms of the bullshits, then like 8,605, you could, like, is that what we're looking at? Are we looking at is this what's going on, in terms of these shithead time frames? Draw in this lower line here, make it green so you can see that green's not very visible. Make it blue, black. Nah, that's definitely not visible. Make it not very good with colors. Colors isn't my forte. Red. We'll go with this ugly red here because I'm bored looking. I appreciate that's not even as easy to see as the green one, but I'm bored looking for a color. Are we looking at something like this just in the meantime? In the meantime, are we looking at something that's like this? Is this actually just actually, I'm not even going to name it. I could name it, but like I say, this channel's for traders. Is this what we're looking at in the meantime here in this hourly chart? Is it? Tell me in the comments down below if you think this is what we're actually got on the go here. Tell me in the comments down below what way you think this is most likely to break statistically, about if you think that's the case. Tell me how long you think into this thing we're likely to go, and tell me about in this thing is what. Actually, no, I'll tell you. Just like since we're looking at it, we're a week away from the halvening. The halvening's coming in at this area here as it happens. Yeah, that's totally going to do. I think there's sort of like I think in some ways, if sort of 2 years ago, say, had I seen videos like this on YouTube, then I'd have liked them, I'd have subscribed, I'd have shared them with all my friends and stuff like that, and said like, this is real, this is our lives, and then there's entertainment and stuff like that as well. And then there's like holistic looks at things, like different people have got completely different philosophies when it comes to trading, all sorts of great stuff. I think personally that that for me this information would be like gold dust. But I appreciate that it's quite vague. I've not given you a summary at the end. I've been really monotonous and somber on purpose throughout the entire video, just to give you, to give no FOMO or greed or to give you any sort of opinion about my own emotions as I'm looking at the chart, because this is the mentality that you need to have when you're doing charting. Is this somber attitude of emotionless, greed-free, fear-free. So that's why that's what this is. This is the me from the inside when I'm trading that's talking on this video. And in tomorrow's videos and all the rest of it, and all the other ones, I'll go back to doing the sort of the me, which is a friendly guy who really loves trading, talking about the charts and all the rest of it, makes jokes and laughs all the time or whatever. I'll go back to doing that tomorrow, but I'm deliberately trying really hard to give you the inner trader here on the video. And the inner trader, we're not robots. We do. When I cut, do I not bleed? When you cut me, do I not bleed? Yeah, of course. But this is what this is the reality on the ground. What you got to operate with if you want to be. Have a successful mindset. So anyway, yeah, I'll go back to all the fun stuff tomorrow, but just bear in mind, this is just a shout out, because I know that this isn't going to be the video that gets thousands and thousands of views, or whatever. But there's a core group of people out there who do watch these videos because they're traders, and I appreciate them so much. I appreciate all you Rocky Outcropticians out there, and so like maybe 50 or so people will be able to get something they can take away from this video and use in their future trading, just in terms of attitude. And that's about it, really. Yeah, so thank you so much for tuning in. I super duper appreciate it. I'm going to go on and take a look at Ethereum just now, and yeah, thanks for tuning in. Share this video with a friend you've got one that I think would like it, and all the rest of it. And join me in the Discord. Come say hi to me or whatever, and let's have a laugh. And yeah, I'll go back to. I'm struggling constantly to not break into to smiles and whatnot, and do that, because that's the mode. But of course, that takes so much. That takes so much energy to do it. So I actually kind of needed to do it in this way today, just to, so I wouldn't burn out. be perfectly honest with you, because like enthusiasm, when it's real, regardless of that, you know, it's like anything else, you know. It's like you can have genuine, real enthusiasm, genuinely, really, all the rest of it, but you can't just keep on banging on the same drum, you know, or whatever. You can't listen. You can have your favorite song ever, but if you listen to that exclusively, desert island discs and stuff like that, it doesn't really make any sense, you know. What would you take with you to your desert island? Well, people talk about their 5 favorite songs, but then when you get off the desert island, you'll never ever want to listen to them ever again, you know. It's that sort of a thing. Yeah, right, great. Thanks so much for tuning in. Catch you next time.